Welcome back on Hot Commodities Diwali special. We did talk about currencies in the previous segment, but let's talk about commodities now, where you have seen equal volatile moves coming in. While the gold prices are trading at record highs in sense of premium in the Indian market, you also have to take a look at the crude prices, which have declined for 7 straight weeks there, and you are looking at multi-month lows coming in for the energy space as well. Let's get in then to talk about that. Joining us on the show are Kunal Shah, who's Head Research, Nirmal Bang Commodities. Also joining me is Ashok Mittal, who's Company Head Retail, Emkay Global Financial Services Limited. Ashok, let's start with you first, and let's talk about the gold price. And this is perhaps the first time in 13 years that we are looking at negative returns coming in from gold, at least in dollar terms. The rupee, of course, we have seen calculations work better.
Our idea is that it's a good time to invest in gold and silver both in the next 1 year when you see declines. Good amount of support in dollars will be around $1,200. So our idea is to invest at that level when you see that dip coming in, because then the cost of production also works out very well. And from that we expect in dollar terms we will see around 30% upside. Say $1,450, $1,500 is the target which we are expecting.
Kunal, what's your sense? Because while in the Indian markets we already are working with a record high premium of around $100 an ounce there, how would you look at between gold and silver as a better place to invest in coming 1 year now?
Well, we believe that it's not the time to invest in gold and silver. The very reason is that the tapering has been delayed so far, and we are going to see the tapering may start during the first quarter of 2014. But when the tapering starts, or even before the tapering starts, again the yields of US bonds will start moving up. People will pull out their money from the safe haven instruments and go back to the traditional risky asset classes. So gold is not looking good, neither silver. So both this asset class, in spite of the fact that we have massive infusion done by Fed, is not performing well. It's on a YTD basis, gold is down by 20% and silver is down by 24%. So it makes me believe that when the actual tapering starts, the gold and silver prices, irrespective of the levels, will remain underperformer as compared to the other asset class.
All right, we have varied discussion coming in here. But let's talk about energy, because that is one space that has continued to decline. Many weeks now we have seen negative returns coming in for crude prices. Ashok, what's your sense going forward? Because on one side there have been geopolitical concerns which seem to be moving out right now. But having said that, the Fed tapering, the dollar movement, all of that would impact the space?
I think yes, all these fundamentals are going to impact prices, but I think the overall range for the year will be around $80 to $115 in NYMEX crude oil. And from here, it looks like that we are headed towards downside. So our idea is that if you look from current levels, we will see somewhere around say $90. So that is going to happen in our view. Now at $90 should you buy or not? Our idea is yes, should buy at around say $90. Then we expect it will not fall below say $80. And should move around $110, $115 range again. So this will remain the range. So you can play within the range or you can buy on dips. The impact of rupee will also be there. So from current levels, if you see an uptick again somewhere around say $108, $110, you can definitely go short with a very small short stop loss.
Kunal, what's your sense in energy space? Between natural gas prices and crude oil, where do you see a better opportunity of buying, or as Ashok pointed out, more bearishness coming in?
The very simple analysis which indicates that there is no reason for buying crude oil is that 2 years back, when crude oil prices were trading at $95 to $90, at that time US oil production was 5.5 million barrels per day. And this year, US oil production has surged from 5.5 to 7.5 million barrels per day. So there is no reason exist on this planet to buy WTI contract. So we remain outright bearish on the contract, and we feel that going forward in 2014, a lot of projection indicates this US oil production will hit above 8 million barrels per day. So there is no reason for buy until any geopolitical tension comes, which generally comes and you see a spike. So this kind of spikes because of this geopolitical news should be used as a good opportunity to sell. We are expecting WTI to fall back and test levels of 88 or 85 going forward during the year.
Ashok, let's talk about the base metal space now. And while we have seen very mixed data come in from US, the Chinese data is something that really catches our eye, and we have seen bad loans and perhaps monetary tightening as is being talked there. Do you see a pressure of that?
Our idea is for the next 1 year, you will see lead and zinc performing quite better. The main reason is fundamentally in both the cases, the supplies or inventories will be lowest in say around 4 years time. So you will see that squeeze happening at that level. Also any kind of say support coming from China, we do expect that they will take measures to improve the economy, so that will have positive impact on these two base metals. So while they have been positive for last 1 year, our idea is you should see around say 25 to 30% gains coming in these commodities.
Kunal, what's your sense in the base metal sector? Which one are you picking up, especially in case of copper, where we have seen or there are expectations of inventories tripling in 2014? How would you want to play that up?
Copper is definitely looking very bearish to us. Two reasons, like you rightly pointed out, the supply growth. The supply growth in China, Chile and Peru is absolutely mind-boggling. I think the difference between demand growth and supply growth is going to be as high as 3% this year, going forward in 2014. So we believe that irrespective of the fact whether the global economy is doing well, I think the indicator of the global economy, copper, which generally people say is not going to perform going forward. So even if you see a better GDP growth from Europe or from China, we think that copper is going to remain underperformer and is going to remain under pressure. Nickel is the only metal which has remained underperformer since last 5 years, and now things are changing with Indonesia planning export ban of nickel ore, and a lot of pig iron producers are cutting their production in China, back in China, even in Indonesia. A lot of nickel producers are cutting back their production. I think that's a very positive sign. So I don't know whether it's going to bottom out in first half or second half, but I am of the firm belief that nickel will bottom out for the next year and is going to rally and test levels of 1,000, 1,050 going forward. So 20-25% return is what I'm expecting out of nickel.
All right, so those are the best picks coming in for the non-agro space. You could be buying in zinc, lead, even nickel. Be bearish on copper. As far as energy space is concerned, you could be bearish onto that one as well. Make short calls on that. And gold is something that you could buy on dips going forward in the next year. With that, let's go for a break. When we come back, we'll talk about the agro space on the best picks for the next Diwali.
Trading Calls, India's favorite market opening show, gives the best technical calls from the top technical experts in the country who are quizzed by the foremost market anchors. Get market-moving trading ideas and make money on a daily basis with Trading Calls. Only on ET Now.
Presented by GE, Imagination at Work. In association with BP in India, there is technology in this partnership. In association with Hyundai Grand i10, the grand new lingo.
India's economic downturn has severely impacted investor sentiment. Will India celebrate the Festival of Lights with a market rally, or will the markets continue to be in a limbo? We asked 3 prominent global speakers about their outlook on India and its share in their emerging market portfolios. Catch India is the worst over a global view. A Diwali special only on ET Now.
In association with OLX.in पे बेच दे.
नई कार लेनी है तो डाउन पेमेंट के लिए पुराने वाली OLX.in पर फ्री ऐड डालकर बेचिए, घर बैठे कमाइए. क्या?
This week on the Leaders of Tomorrow series, our attention is focused on the pharmaceuticals and drugs. Catch the remarkable excellence of Ravi and Life Science, PXL Drugs and Pharmaceuticals, Medical Remedies, and Century Pharmaceuticals.
Our belief is quality product as well as delivery in time.
Last 1 year we have done almost like 50 lakh rupees of business.
Well, in terms of growth, we will double our sales in the next 2 to 3 years.
Watch Leaders of Tomorrow, episode 10, only on ET Now.
Brought to you by IndiaMart.com.
3 जोड़ी कपड़े और 36 किताबें, सपने देखने की फुर्सत और उनके पीछे भागने का जुनून. ये है वो जिनके रगे कल देश के रगे बनेंगे, जिनके पैरों में आज चप्पल है वो कल देश के पहिए बनेंगे. Because excellence drives the Skoda Rapid.
Skoda, simply clever.
Welcome back. Let's talk about the agro space now, where we have seen good monsoons, but even then the inflation rates are on the higher side, especially for food, and you still have seen the food prices going on the higher side. The first acreage and the sowing reports from the government have started coming in. How would that put impact on the prices, and where are the agro prices headed in the year to come? For that, let's go back to our experts, Kunal and Ashok. Ashok, to you first yet again then. How would you look at the agro space? Because while the monsoon has been good, but we still are talking about those high inflation, that perhaps is coming in more from fruits and vegetables and less than perhaps from pulses and stuff like wheat and rice.
For next 1 year, what we feel is that chana should be the pick for this Diwali, because it has been underperforming for quite a long time, and now whatever rains have happened, they have like actually helped farmers to sow other crops in fact, and chana prices has been under pressure. Also the stocks on NCDX warehouse is quite high. So we see that because of the lower prices, because of higher stocks being available and farmer moving to other commodities, the sowing for next year will be quite less for chana. And that means there will be supply constraint. At the same time, the imports of Australia we have to see. So our idea will be also now the chana is trading below the MSP. So somewhere around 2,700 should be a very good idea to buy chana. And our idea, because of the lower crops, and then when the prices are lower, farmers normally tend to hold the stocks. So we should see some prices around 3,500, 3,700 range, which means they will give quite a good amount of returns as far as investment is concerned.
Kunal, to you then, what's your best pick coming in for the agro space, on the upside as well as the downside?
Well, for the upside, we feel that Jeera is looking very, very good. It's a depressed commodity. 3 years people have been waiting for it to move up, but none of the rallies were sustainable. This year, the major difference is 76% surge in export as compared to last year. Because of the problems in the Syria, I think the exports from India so far as compared to the last year during same period is as high as 76% surge. This will lead to a drawdown of carry forward stock. And any problem during the sowing season going forward in November, December, or after sowing season, any weather disruptions can really lit the fire to the Jeera prices. So, in spite of the fact that we had a bumper crop this year, we expect next year Jeera prices to remain under and give very good returns. 12,000 good levels to go long in Jeera, and we expect prices to move up and test levels of 14,000, 14,500. So that's the best pick of agri from our desk for Jeera.
And let's also get in a voice from Kishore Narne of Motilal Oswal on what his best picks are coming in for the agro space for the next 1 year.
At this point of time, I would use this rally to sell soybean, and looking at the overall scenario, I will not be surprised if soybean falls back to 2,800, 2,750 kind of levels towards the peak season, especially November and December, post Diwali, when the arrivals will pick up significantly. I think old crop pressure will be significant enough. And other commodities, I think if you are looking for a bullish commodity, chana is one good commodity which can be positive. At least another 15% upside could be possible in chana. Jeera is one commodity. Again, I would like to buy somewhere close to 12,000 kind of levels. Again, I would be looking at 16,000 plus in the coming year in Jeera. Again, one of the most popular commodities, guar. I don't see any major upside in guar, though I'm not ruling out a short-term upside. Short-term possible, you can see around 6,000 plus kind of levels, but I think if you look at the industry in guar especially, it's not even operating at 20% of its capacity. A huge amount of idle capacity is there. There is no buying interest, especially from the overseas importers. There is a significant amount of stocks built up in the overseas ports. So I don't think there is any sustainable rally in guar, and but at the same time I don't expect it to fall beyond 4,000 rupees. So I think 4,000, 4,200 should be a bottom for guar, but at the same time I will rule out any major rally in guar this year.
Alright, so that's the view coming in on the agro space as well. Thank you so much Ashok, Kishore and Kunal as well for your best picks in agro. The highest picks of course coming in are sugar, chana and jeera. On the higher side you could buy them. 25 to 30% of gains is what our experts are expecting in this space. With that, it's a wrap on the Hot Commodities Diwali special. Hope you've taken or noted down all the expert comments that you've heard about currencies and commodities going forward. Trade, get benefit out of them, and happy Diwali till next time.